Hello and welcome to Economy Markets TV. We have conversations with a purpose. I'm your host, Dave Okenquist, Senior Research Analyst here at Dent. Joining me, of course, as you can see, is the founder of Dent Research, Mr. Harry Dent. Harry, great to talk to you.
Yeah, good to be here.
Now, Harry, you and I talk just about every day, but it's good to look face to face. So always good to catch up with you. I wanted to get your thoughts on some of the developments of this week. Facebook released their white paper for their cryptocurrency Libra. Just a couple of details. It's backed by a basket of currencies, and it seems like their focus here is on international transactions, remittances, that sort of thing. My question for you is, what do you think of Libra, first of all, and then what effect do you think it'll have on cryptos and like Bitcoin?
Well, you can already see that the cryptos and Bitcoin actually went up this week on this. It gives credibility. It's very similar to AOL introducing the world on a mass scale to email and the internet when it first came out, and it was tiny. So this is a good thing, but they're trying to do something different, and it's going to get some backlash from the crypto industry, but it doesn't matter. It's more like creating a digital dollar, and it is aimed today at international transactions, money transfers at almost no cost. And as people know, when you travel, Facebook things like WhatsApp and Messenger often work better and most consistently. I use it in Australia, for example, in Europe when I go there. And so the first thing is to do more financial transactions overseas and in third world countries. But ultimately, their goal is, Facebook dominates social media, has a growing list, the biggest growing list of customers of anybody in the world at this rate. And they want to do more financial transactions. They are ultimately looking at targeting the banks and financial intermediaries, much like cryptocurrencies. And so this is a big potential play for Facebook, but it gives the whole space credibility. And it's like a digital dollar. Bitcoin is trying to be an alternative currency altogether that is not tied to any central source. It is more bottoms up. But the more this happens with crypto and the more people get used to crypto, think of all the people on Facebook, maybe 1 out of 1,000 of them own a Bitcoin. Imagine how many people might consider doing it when this becomes more mainstream in the coming years. So this is a win-win at this point, but there will be a lot of backlash, and AOL got a lot of backlash. And this is going to be regular. I mean, this is going to invite more regulation of Facebook. So there's some setbacks to this, but it is a good thing for cryptos. And cryptos, as we said just a week or two ago, it's following our projection of 32,000 within the next several months, and now it's closer to 10,000 before it's just set back. And Tom Lee, I think the leading kind of Wall Street analyst on this, is saying he sees no problem breaking to new highs by the end of the year. I don't either. I think this is very likely. So another confirmation also of the dark window.
Excellent. So yeah, great point there. Interesting. The problem with cryptocurrencies is no one understands how to use them, how to get them. But if you can get it through something like Facebook that you can understand, maybe that's the ticket to
you learn adoption. It on training wheels. You learn it on training wheels. So this is good. The industry is reacting favorably, including Bitcoin.
Yeah, absolutely. Now, of course, also going on this week, the Fed had their meeting and their announcement that they're keeping steady on rates, and the S&P opened to all-time highs this morning based pretty much on that news, and then a bit shaky with all this craziness going on in the Middle East. Wanted to get your read on the markets and what you think of all this.
Well, yeah, this is another confirmation. We've been watching this correction after, we got the big correction October, December. We had a very strong bounce. And now since May, we're correcting again. Our thing, okay, we can either correct shallow and continue right up to new highs in the next month or so and start this dark window continuing on to a 10,000 NASDAQ target. Well, we were watching this thing get a little steeper. The last time we reviewed this, I am going to be looking at this on Monday for boom and bust subscribers and 5-day forecast and update of the chart. But it is now looking like the shallow correction. We're retesting the highs on the S&P. The NASDAQ's not there quite yet. And after some little pullback here, there's a better chance that we're just going to shoot up. That puts us into wave 3 of this final bubble. And that means there's a wave 5 after that. So this next wave could take us into September, could be over 9,000 in the NASDAQ. And then the final wave should take us over 10,000 by our best dark window projection. So both of these, we've been projecting that Bitcoin would go to something like 32,000, maybe higher, NASDAQ 10,000, Dow 33,000, S&P 3,500 plus. This all looks like it's happening even though the economy keeps weakening around the world. See, people understand markets on crack want more crack. And moderate growth is better than strong growth, because moderate growth means central banks remain accommodative. We've seen China stimulate because of the trade war, and strongly. We've seen ECB turn back towards stimulus. Mario Draghi just made that clear recently. And now Powell comes out this week and kind of cowers to Trump and says, yes, we are ready on a moment's notice to get accommodative again. So of course the market's like this. It's not good long term, but the market's on crack, want more crack, and this is all the reason for them to go up in this final bubble. And I'm telling you, this could all be over by late this year, early next year. My range is September at the earliest, more likely early next year, January to March, that we see a peak in this final bubble, and then the great crash. And people should always remember, the first crash of this crash should be 40% or more in the first 2 to 3 months. So getting out a little early is going to be better than a little late.
Yeah, absolutely. We're going to follow your market analysis on economyandmarkets.com, 5-day forecast, and of course, boom and bust. And for all of you watching, what do you think of Facebook's Libra? What do you think of what's going on with the markets and the Fed not doing anything, maybe hinting rate cuts in the future? Send those questions to tv@economyandmarkets.com or reply below this video. For Harry Dent, I'm Dave Okenquist, and this has been Economy and Markets TV.